Well, government launched its COVID-19 loan guarantee scheme in May last year. After a seemingly slow start, are we seeing more small businesses taking advantage of the relief scheme? Well, it doesn't look like that's happening. According to the Banking Association of South Africa, as of mid-January this year, just under 18 billion rand in loans had been approved as part of the scheme. Think about that for a moment. 200 billion rand available as a guarantee, loan guarantee scheme. Just under 18 billion rand has been taken up in all those months. The number is way below expectations considering the financial strain many small businesses find themselves faced with. Why is this happening? Let's discuss it with Bongiwe Kunene, who is the Managing Director of the Banking Association of South Africa. Bongiwe, good morning. Thank you for joining me, and I appreciate this moment. So in terms of the explanations that were given for what this loan guarantee scheme can be used for, it was to assist businesses affected by the lockdown and the COVID-19 situation for such things as operational expenses, salaries, rent, lease agreements, and fulfilling contracts with suppliers. I would say that's exactly what many businesses need under these conditions. So why is such a useful scheme not being taken advantage of?
Thank you very much, Tulas, for having me on your show. The loan guarantee scheme has performed below expectations. The reasons for entrepreneurs for not taking it up vary. Principal among those reasons, first, for anyone who's borrowing, they need to have the ability to repay. Our information is that a number of businesses who could be eligible are facing headwinds, and they are not sure of their own ability to repay. But also, the terms and conditions of the scheme speaks to the ability of these businesses being able to continue as going concerns. Meanwhile, the entrepreneurs and the business owners are thinking maybe this is not the right time to be increasing their debt. They are right-sizing in various ways, either by laying off their workers or taking more from friends and relatives and other sources, and not money from the banking profession.
So you also make the point in the statement that you released recently, giving an update on how the scheme is going. You make the point that there are issues about the regulation and policy consistency that you're saying worries some of these companies that, would have been beneficiaries of this scheme. Expand on that a bit.
Okay, so recently, you would be aware that there are a number of regulations which are coming out. Some of them are a form of regulating the economy during the lockdown. So these come under the Disaster Management Act. And they come with each level of operation, whether it's level 5, 4, or 3 going on. And these are very uncertain. So for anyone who is running a business, when you're not sure what kind of regulations are going to talk to what times you can be open, talk to how many people can enter your business, and talk to just the general conditions under which you operate, that increases the level of uncertainty.
Is there something in terms of the terms on which these loans are offered, Bongiwe, that needs to be addressed? I see that you mentioned a figure of, as of January 16 this year, you had received some 48,366 applications for loans linked to this scheme, which is basically a scheme that says, should you fail to repay, government would step up and the banking the banks take on that risk as well to assist you to restart your business and to run your business that has been affected by COVID-19. But out of that 48,366 or so applications, your members, the banks, had only approved some 27%. Is there something about the conditions that attach to the granting of these loans that's also perhaps driving this slow take-up?
Well, the conditions were relaxed. So the scheme started in May, as you rightly said, and then it was retweaked in terms of conditions in July. So the conditions, particularly relating to information that the businesses had to submit to the banks, were relaxed quite significantly. And also, the applicants previously had to give assurance that the documents they have had been gone through the audit cycle. That was also relaxed. So insofar as relaxation of requirements, there was quite a big move. So maybe now what we should really be concentrating on is hearing a bit more from business operators. What kind of economic reforms will see them operating at a higher level of confidence? Because right now, what we are seeing is lack of confidence, both in business sense and also in consumer sense.
And the figures make for interesting reading as well. I mean, if you talk about 46% of the applications that were rejected being applications that did not meet the eligibility criteria for the loan scheme. 46% of those that were rejected did not meet the eligibility criteria. That says to me there is demand, but it's perhaps entities that don't necessarily conform to the specific mandate that you have as the banks working with National Treasury. For example, how big a factor is the fact that the scheme only assists those businesses that demonstrably have been affected by COVID-19 and the lockdown versus businesses that are just going through a difficult time that cannot show that this is linked to the lockdown?
It's very clear to us that our economy has been underperforming for some time. The scheme is designed to help those whose difficulties are directly linked with COVID-19 and those whose operations have been severely affected by the series of lockdowns that we've had. Now, if you look beyond December 2019 to 2019 itself, 2018, you'll also see that the economy was not doing well at all. So maybe that is one of the biggest contributing factor for the 46% that could not be assigned loans, because they could have been in difficult conditions well before 2020.
So this week offers an opportunity by way of, at the very least, the president signposting and basically giving the signal policy-wise in terms of where interventions can be made. Have you been thinking as the Banking Association around how to tweak this particular scheme, or perhaps what alternative scheme would respond more to the needs of small and medium enterprises?
Well, the first take as it relates to the scheme, Tulas, is about the risk appetite of the government itself. Remember that this is the scheme designed by National Treasury and the Reserve Bank to help the economy, and the banks are the executing institutions on the scheme. So if 94% is the appetite of government in case of failure, and the scheme is performing at 27%, one would want to ask, if it was beyond 94%, will there be more takers to the scheme? Would there be a greater success factor? Really, I do not want to speculate. The other issue, Tulas, is that the scheme is open. It's open in a lot of different ways. For example, any entrepreneur who is affected may apply, because once they've read the conditions, they would then see that they've been affected and they are also eligible. But we see that the ones who have taken the most out of the scheme are those with turnover of less than 20 million rand, 82% to be precise. Maybe we should just be very emphatic and say that this scheme must be directed at that level if anyone beyond that is unable to use the scheme effectively. But this is something that must be fact-based and evidence-based in terms of research as we check on what can be done.
All right, thank you for your insights there, Bongiwe Kunene, who is the MD of the Banking Association of South Africa, also suggesting what tweaks are possible to this scheme. As you heard there, some 200 billion rand loan guarantee scheme offered by government working together with the banks. But from the figures given by Bongiwe Kunene's organization there, some just under 18 billion rand has been taken up, and she's been outlining the factors at play as to why it's not being taken up enthusiastically.